Welcome to Bloomberg Markets. I'm Sonali Basak. Want to bring you with some breaking news here. President Biden says he will be on the campaign trail. Biden is absolutely determined to remain in the presidential race and will resume campaigning next week, even as allies have begun seeking his exit from the race as inevitability. We will bring you more on that in just a moment. I would want to say also, of course, this comes on the heels of an NBC report earlier today that was refuted by the White House, the idea that his family is also considering ways to breach the discussion here with the president as well. Of course, also comes on the heels of a closure of a Republican National Convention as well. Again, we will bring you more as we get it. Now, let's get you a quick check on the markets here. We're watching an S&P 500 still down on the day, now down about 0.4%, almost 0.5%, and a NASDAQ 100, even steeper losses there, about 0.7%. Tech having a really difficult week this week. Dow Jones Industrial Average now down about 0.8%. VIX is elevated. We're looking at volatility just a little higher today at about a 16 handle. One equity mover we're watching in particular, of course, is cybersecurity giant CrowdStrike behind a power outage that upended markets and disrupted corporate operations around the world today. A faulty patch led to system-wide failures that paralyzed the operations of clients, including banks, global retail giants, and healthcare systems. We're going to discuss this tech issue with Bloomberg Intelligence senior analyst Mandeep Singh. And of course, you're still watching CrowdStrike's shares down about 13%. They've been fluctuating all day, still in loss territory. How did this exactly happen, and how much blame will they be assigned as all of this is sorted through?
Yeah, look, I mean, they shipped an update which was a big update in the sense that, it affected operating system functionality. So a lot of times companies would ship code changes, and even if there are bugs, they don't bring down the entire system. So in this case, this was a worldwide outage caused because Windows couldn't reboot. And the challenge they have with rolling this back is it requires manual reboot in a lot of cases. So even though they have rolled back the changes, Windows won't get functional on its own. So I think that's where, to answer your question on the blame, I mean, Microsoft will say it was a CrowdStrike update. And remember, CrowdStrike and Microsoft are the two biggest endpoint security players. So Microsoft actually has a product that competes with CrowdStrike. And I think there will be financial liabilities in this case because customers will sue for what happened.
For the Microsoft perspective here, what was their fault exactly?
Well, so all these things, when they're rolled out, are tested properly. And, Microsoft couldn't have done a great deal here, given, every software vendor kind of installs their software on their operating system. And some of the functionality does have an impact. In this case, it's more about it didn't happen on Linux, which is the other operating system, or it didn't happen on Apple operating system. So you have to ask yourself, why Windows? And probably CrowdStrike only rolled out this change for Windows. They didn't do it for Linux and Apple.
Mandeep, much more on that story later. I hope you will join us later in the day as well. That is Bloomberg Intelligence senior analyst Mandeep Singh. Now back to that story. President Joe Biden says the stakes are high in the 2024 election, but the choice is clear following the Republican Donald Trump's RNC speech. And he will be on the campaign trail next week. That is Joe Biden. Bloomberg's Wendy Benjaminson joins us now on Biden's latest statements. And how do you read his reaction here, given what we have seen throughout the morning on escalating conversation around whether he will stay in the race or not?
Well, I think he really had no choice but to say that he would resume campaigning this week. He's not going to decide he's out until he's ready to say he's out, or he may decide, but he hasn't, not going to say anything publicly. I mean, we have this headline saying he will resume campaigning next week. If he said stay tuned for an announcement, that headline would be tremendously different. So we don't really know what's going on at Rehoboth with his closest aides and his family members. There certainly seems to be this groundswell pushing him inexorably toward the exit. But, Biden, as he said in that statement, seems to be very confident still that he is the only Democrat who can beat Donald Trump, despite a lot of Democrats saying otherwise.
How do you see the path ahead for President Biden at this point? You mentioned the groundswell of calls asking him to step aside, yet his promise here that he will be on the campaign trail next week. What does this weekend look like to you, Wendy?
Well, first he has to recover from COVID, first of all. So we have to, he has to stay isolated during that time. He could certainly, go on Zoom or, through Zoom, go on television appearances or things like that, although none are scheduled. We don't really know how he's feeling. We know the doctors say he has mild symptoms and he's obviously, up and about. But we don't know really what his condition is. So this weekend, I think there's going to be a lot of huddling and a lot of tough talk and a lot of difficult conversations. And then we're all on pins and needles to see what happens next week.
Wendy Benjaminson, we thank you so very much for joining us on the latest breaking news. Now back to markets. Here's a snapshot of the major indices for the past 5 days. Investors pulled out of high-flying megacap names, rotated into smaller companies. For the most part, that trade feeling some pain today. Let's discuss the week that was with Bloomberg's Jess Menton and Alexandra Semenova, because there were some compelling trades. You can call it the rotation trade. Now the question is, does it stick, Jess?
Right. So especially if you want to follow the money and look at the flows data specifically for small caps. So they actually saw their second largest inflows ever at close to about 10 billion. This is EPFR data that Bank of America, of course, does modeling on that we did get this morning. So you're seeing that happening. But then also, of course, we've talked so much about the equal weight index. So I actually have a story coming out tomorrow where I was looking at the rate of change, because we just crossed over the 21-month mark since the bull run began for the S&P 500 from those lows in October of 2022. So if you look at this compared to the past 4 prior bull runs since 1990, the equal weight is down around 14%, whereas at that point in the 4 prior ones, the equal weight was actually up about 15 percentage points on average. So even though we've seen a vast improvement over the last week with what's happening with the broadening out in equal weight, a lot more needs to improve. So the question is, do we continue to see that broadening out happening over the second half?
Now, Alex, you talked to a lot of strategists across Wall Street, and the trades that worked for them going up to this point in the year, AI, high-flying tech, a lot of that is either facing pressure, reversing, or at least not as exciting as some of the newer trades out there. Are people changing their thinking going into the rest of this year?
As Jess had mentioned, we're going to need to see some more assurance that this rotation can continue, and that is the view for many Wall Street pros. We've seen a lot of head fakes as expectations around rate cuts have fluctuated, and they're going to need to see some more assurance that the Fed is indeed on track to cut rates as soon as September, and especially that fundamentals are holding up as well. Andrew Tyler at JP Morgan's trading desk points out that although he does see legs for this rotation, he thinks that as soon as the big tech companies start rolling out their earnings reports, investors are going to turn their attention back to fundamentals. The Magnificent Seven companies are expected to report earnings growth of 29% year over year in the second quarter. And of course, even though that is stalling from previous quarters, that is still an incredible show out from those companies. So that could rekindle enthusiasm for the big tech companies that have kind of faltered this
Glad
week.
you brought up earnings here, because how fragile are these companies, the stocks at these levels, to any misses?
Incredibly fragile. Of course, we've seen companies beating expectations over and over again in recent quarters, so that makes the bar a lot higher this time around, especially for those Magnificent Seven names.
Jess, when we think about the fragility of the market where it stands today, and you were saying for even just that rotation trade,
right,
which should have been a conviction trade, right? You're really betting on companies that have not been doing as well in this rally. Exactly what is it that people need to see? Because the bond market is betting pretty firmly on that September cut.
Yeah, well, because we have, to Alex's point, we have the big tech earnings coming up later this month, the same week, obviously, as the Fed decision on the 31st. The big thing is because we still have another month to go before we hear from NVIDIA. So what you should look for is NVIDIA's customers, and especially when you're thinking about Meta, Microsoft, Alphabet, as well as Amazon. I mean, it combined over the last 4 quarters, there's about $150 billion of capital expenditures that were spent. So if you start to hear from NVIDIA's customers, if there's any sign of pulling back, that's where you could see potentially more fragility on the top of that. But right now, if you're looking at the option side of things for the small caps or the equal weight, there's call buying that's happening in a strong level in the option space. So that actually is an optimistic sign for those kind of unloved and forgotten corners of the market.
People hoping for better days. Lastly, Jess, another thing we were following very closely, of course, is the political influence that is underneath the markets here. How strong is the Trump trade now coming out of this week?
Well, Well, it's dependent on kind of what happens moving forward over the next few weeks. The Democratic National Convention isn't until the week of August 19th. That's actually later that week. We'll also have Jackson Hole. But really, it's more of a confusing. When I was actually talking to traders yesterday, last night, there was an event over in the financial district near the New York Stock Exchange, and they were talking about how if there was a potentially maybe any sort of unexpected news from the Biden administration, that could potentially unwind in the short term some of the financials implications from what happened recently with the Trump trade. But the Biden trade's been slow and steady, so it's a little more convoluted depending on what potential policies could come out of that right now.
We were talking about earnings writ large as well, and this kind of idea of what kind of you have to watch NVIDIA no matter what here, right? Like no matter what happens, watch NVIDIA. What else are you watching for, Alex? Are there certain catalysts during this earnings season that are going to make a bigger difference than others?
At this point, it's just about earnings kind of reaching up to those expectations that everyone has been, hoping for. We've been kind of waiting for the earnings catalysts to help lift the market, which has kind of been in a mire this past week. And if you look at data, overwhelmingly, it shows the earnings season has been supportive for the S&P 500 from when JP Morgan reports, which is the unofficial start of earnings season, to when Walmart reports the unofficial end. Since 1999, the S&P 500 has risen 67% of the time. So the expectation is just that those earnings reports hold up, and we continue to see data come in a Goldilocks backdrop.
That is the ever-brilliant Bloomberg just mentioned and Alex Semenova. And coming up next, we're going to talk more about earnings. American Express on a marketing spree as payments on its credit card slow in the second quarter. More from our interview with the CEO next. This is Bloomberg. It's time now for Stock of the Hour. American Express expects its marketing expenses to increase in the coming months after consumer spending on the firm's credit cards fell short of analyst expectations. Bloomberg's Caroline Hyde spoke with American Express CEO Steve Squeri. Joins me now. And Caroline, you think about the stock lower despite record revenue. You did see the revenue miss a little bit, but every other metric pretty much beat. Why such negativity?
There's a slight, perhaps, concern around the billings ticking. And when I say ticking, really just ticking ever so slightly lower on travel. But I think ultimately this is a record run, not only in terms of revenue, but the share price has been near all-time highs. And Steve Squeri is really trying to paint a picture of why do I invest so much now in marketing and in technology? That's exactly what he said he's been doing at the moment, is he wants to invest in the business. But this is about just doubling down on the millennial, the Gen Z spender, where they continue to see this engine of growth. They want to be refreshing the gold card. He thinks the investment that they're going to make, and they can make because, well, they've just done a bit of selling off of a key asset, a certify, garnered them a load of money. They can ultimately drive up earnings per share, raised earnings per share forecast for the year, and stick to their 9 to 11% growth quarter on quarter in terms of their overall revenue, while still trying to just spend into this moment. So I think maybe there's just a little bit of nervousness when the stock's at all-time highs now.
Talk a little more about the gold card. Who is it actually trying to bring in?
You and me. Millennials, Gen Z. Unfortunately, I'm not a Gen Z or classified. I'm just clinging on to the millennial
side
of things.
I am so millennial myself.
But I think it is people who want the rewards. They're going to be traveling. They're going to be spending out in restaurants. And what's interesting is also they have been doing this M&A. Remember, they've just done a deal for TOC. Why buy TOC? It's about making you and I then spend more when we are reserving a restaurant, getting in and understanding how that they can service us, not just as a US traveler, as an international traveler as well. They've really been starting to make sure that Amex is accepted in, when we're traveling around Europe and Paris and Cannes and Italy and France and London. They've doubled down on these 50 cities to ensure that it's accepted and we can spend there. So M&A actually an interesting one, saying that they're going to be acquisitive as and when it suits them.
Can we talk also about CrowdStrike for a moment?
Yeah.
We know that CrowdStrike really did impact a lot of the financial community. What did he say to you about that?
Look, everyone's going to be affected, was his main point of view. And yes, actually, they did have a slowing of their service at the beginning in the morning. And largely, he said, the way in which they felt it is a whole load of phone calls coming. So you can see from the full screen that he's saying, look, our call log just went up and up. Why? People are stuck in an airport. They're unable to rebook. And so they're getting on and not just wanting to deal with the chatbot, but the real person behind that chatbot as well to try and get rebooked. So they were affected. But look, most businesses in some way have been affected by CrowdStrike. I'm about to get on a plane a little bit later, so fingers fingers crossed whether or not it's running.
Very, very good luck to you. I know a lot of people already that have been sitting in airports. We hope you are not one of them, Caroline. Or thank you very much to Caroline Hyde, of course, co-host of Bloomberg Technology. And coming up, Mark Zuckerberg calls Trump badass, but stops short of endorsing him for president. More from our interview with the Meta platform CEO. This is Bloomberg. Mark Zuckerberg stopped short of endorsing Donald Trump for president after the Republican nominee gained support from the likes of Ken Griffin and Elon Musk over the weekend. Ken Griffin still yet to donate, though, I would say. But Zuckerberg spoke with Bloomberg's Emily Chang about the election for her show, The Circuit. Take a look.
I've done some stuff personally in the past. I'm not planning on doing that this time. And that includes, not endorsing either of the candidates. Now, look, there's obviously a lot of crazy stuff going on in the world. The historic events over over the weekend. And, on a personal note, it's, seeing Donald Trump get up after getting shot in the face and pump his fist in the air with the American flag is one of the most badass things I've ever seen in my life. But look, it's, and I think, look, it's, at some level as an American, it's like, hard to not get kind of emotional about that spirit and that fight. And I think that's why a lot of people like the guy.
And you could watch the exclusive interview with Mark Zuckerberg on The Circuit with Emily Chang on Tuesday on Bloomberg. Now, sticking with politics, hedge funds have spent 2 months unloading the best performing stocks in the market, a move aimed at securing cash on hand amid a wild presidential campaign. Hedge funds are now underweight in technology, media, and telecom by the most on record, if you could believe that. Bloomberg's Natalia Nazevich reported on what's going on here, and we have to kind of explain here. This is a cohort of fast money. You're watching the fastest of money here, the way that banks and traders are really, and hedge fund traders are really interacting with the market. What is changing, and how quickly is it changing?
Yes, so basically in May, I noticed that hedge funds started selling U.S. stocks. Then the pace really accelerated in June. And then TMT, as you mentioned, is now the most underweight sectors. A deeper dive shows that information technology, semiconductor stocks, they account for the majority of that selling. And then as I was talking to hedge funds themselves, hedge fund watchers, firms that consult funds, they all told me that, yes, this is a strategy because hedge funds want to take profits from some of the best performing stocks, and they want to have cash on hand ready as we approach U.S. presidential election, because this is basically a really good environment for them to place bets, whether it's a long side or short side. And look at headlines we have now, right, on politics. Anxiety rises. And as someone else told me, like, listen, the U.S. presidential election can start much sooner than November, and they want to be ready.
Explain exactly what that means, because does that mean that they will be risk off until November or even longer?
That's one of the strategies. So basically, we could categorize like 3 main strategies for funds. First of all, on a sector level. So they try to look at different sectors. They look at policies from different candidates. The second one is more like risk on, risk off. So they try to delever, reduce net exposure, which is long minus short positions before the election. And then as we get closer to the vote, they can accelerate, they can start buying again. And also it's important that they also want to have more cash ready in case we have some unpredictable moves in stocks. Like, remember 2016, people were expecting that stocks would drop if Trump was elected, but the opposite happened. So they want to be really nimble. And the third one, probably the most complicated, at a single stock level. And as someone else told me, this is basically shooting first and analyzing it later.
Well, it's amazing because you think about just a lot of the risks you saw geopolitically this week when you think about the Biden stance on the semiconductor industry as it relates to China, and you saw the way that stocks started to sell off. How much are opinions starting to sour on semis in particular, and when does that negativity start to also feed into other aspects of the technology sector?
we still don't know, because one of the questions that I asked, like, listen, it can be so risky because, okay, hedge funds are selling. What if the opposite happens? What if those tech stocks will keep rising? Because for many people, it's also a safe play because fundamentals are much better than like a couple years ago. And if those stocks keep rising, hedge funds can perform really poorly. So we know that they are already behind the market, right? We look at performance over the past 4 years. They, this year alone, U.S. long-short fundamental funds are up by 7.4% versus the S&P 500 plus 17, right, year to date. So if they make a wrong bet, it's going to be pretty like damaging for them.
And of course, we know many are still below their high water mark since those losses of 2022. Bloomberg's Natalia Nazevich, we thank you so very much for your time. We're going to take a look at these markets here because what a tough trade this week. We're taking a look here at the S&P 500. Of course, on a 1 week basis, you're looking at it down about 1.9%. The Russell 2000 is not down over that same period of time, although you have seen a 3-day sell-off since we've seen that rally as well. But you are still seeing it up more than 1% on the week. That rotation trade has been an interesting one, of course, because we have seen tech stocks really lag in this market, particularly today, as you saw not just the outage this week weighing on sentiment, but of course the last couple of days since that Biden announcement on China as well, and the stance he's taking on the semiconductor industry, a very tough one. And we will watch that trade into next week. The Philadelphia Semiconductor Index also meaningfully down this week. But that's the setup for this week. That does it for Bloomberg Markets this week. I'm Sonali Basak. More markets ahead. Stick with us. This is Bloomberg.